Global Head of Market Research here at ATFX. We're going to take a look at the markets as we usually do at this time of the day, and today is I was about to say Fed Day, but obviously it's not because I was on Wednesday. Is NFP Day, big day for the markets. Could create some interesting outcomes. Now, I think what we need to pay attention to is wage growth, and you're also looking at the headline figure. The headline figure is so volatile. So, like, yeah, you can see just on my face. It's a bit of a random piece of thing, and as long as it prints around 185,000, which is what is projected, then we should be fine. Wage growth should be out about at 3.3% annually, and obviously if it beats expectations or pretty much on point, it should just not be any major changes to the dollar. But if wage growth is slightly higher than expected, it could boost the dollar, and as well, if the numbers are bad, of course, it'll cause the dollar to sink a bit. Now, the different ways of working with that, and one thing I would not do is try to trade a euro on the back of that. But you could potentially trade something like gold prices. So this is gold prices, and you might remember, of course you do, you join me every morning, don't you? Big head and shoulders, market move down, hard retest of that head and shoulders, but still moved away from those levels as the Federal Reserve and the head of the Fed sort of telling us that they're not seeing any major changes to interest rates or monetary policy, no cuts and no increases, which is obviously a slap in the face to all those people betting on a recession this year, or assuming we're gonna have rate cuts, because that's actually what they're betting on. Now, what's happening here is that we moved away here, and I think it makes sense. I've been saying this quite some time, and also in the quarterly report of ATFX, I say the same thing. I think they're gonna price out those rate cuts and just be neutral. Now, here, if it was not for the Federal Reserve and sorry, for the NFP day, I would have just said, well, if we swing back up to 1273, I would probably short, stop loss just on the other side. But because it's the known from payrolls, we can't really apply that sort of, we can't just trade it like that. Because if we just short here, if the known from payrolls is bad, it's going to be at 1280. And we can still short if we wanted to. The idea is that if the number's not terribly bad, and it's just sort of a little bit weak, but you sort of think that the overarching sort of weakness of gold will persist, then one can still short here, and from a technical point of view, should be perfectly fine. But if the numbers are very bad, then obviously this is going to shoot straight up, and you'll be stopped out on Monday morning when the market breaks this high. On the other hand, if the number is really good, then we'll take out the low, and I think that's really where I would be looking at right now. Looking at this and just saying, okay, if we take that out, probably trade a little bit lower, and you can grab a bit of pips there, a bit of scalping, or maybe breaking the low and then sort of seeing this trade much lower over the next few days. So that's more interesting. You got a nice little double bottom here. You have that head and shoulders motivating that downside. Looking at the EURUSD, you have a bit of a dodgy downtrend, and that's about it. Here we're about 50 pip away from support and about 100 pip away from resistance as well. So shorting here right now does not make sense. Or maybe shorting, like I said yesterday, at 112-ish, that would have been better, and stop just above the high. But this is so sluggish, guys. It's definitely going lower. Macro fundamentally, it makes perfect sense as well. But this is no commitment. Nobody wants to buy it. Nobody wants to sell it. Everybody's sort of happy with. No, I don't think people are happy, but it's just being very, very boring. It's sort of very difficult to do anything here. Now, technically, the trend is bearish below 1265. GBP versus the USD. You see these two big candles here? Those are candles telling us that buyers are moving out of this position, moving out here. They don't really want to be buying up here. Two bearish candle in a row, following that strong move. I don't know, and I think here potentially we'll be trading at 129.50 independently on the non-farm payrolls. That's what I think. And then there is some people that are saying, and look, this is a head and shoulders pattern. So you got yourself like a right shoulder here, left shoulder, head, right shoulder, and then people say, okay, look, let's buy here. and then sort of target the highs here, and that could be something. I might be totally wrong. They might cut rates. Maybe there's some deal in the making here about Brexit that I don't know about. Maybe some guy with a lot of insider information or something like that, um, thinking on positions or have hints. Forex markets are different to stock markets, where there's no real enforcement, I would say, and also I think there's no rules on insider trading when it comes down to forex markets. Obviously, it's in stock markets. I think all I know is that's illegal. But forex is so big, so it's very hard to manipulate. Um, so yeah, maybe something like this. Residual ratios about 4 times, but trying to buy in the right shoulder of a pattern is always very difficult. Dollar yen remains above support. This one as well. It could be down here. It could be up here. But let's be rational about it. What's going to happen? Most likely it's going to be on point. Maybe slightly higher. Maybe. Most likely, I think. Is it going to be 20K again? Probably not. Is it going to be 100K? Probably not. Could it be 150? Yes. But could it be maybe like the ADP, which is like 200 and something? Yeah, that could also happen, and that's more likely. So from that perspective, we don't have to make a big fuss of it. The numbers will probably be good, and I think eventually this market is going to go upwards. So in the case of dollar versus the Japanese yen, I maintain that bullish bias about 110.81. You just need to understand, guys, that the volatility is going to be higher here, so we may actually be stopped out and then go upwards. That's not what we're going to look at. We're going to look at, well, gold we already talked about. There are different ways here. So if we take out the low, I'm guessing some people are going to short here. Stops are going to go up here somewhere. Alternatively, again, swings up and then down. Crude oil prices turning lower. So yesterday we said that on a break to this level, we're probably going to trade lower. So about 30 minutes after we finished yesterday's presentation or so, sorry, that's not correct. In the afternoon, the market sort of traded lower. And that's it, really. We said to take out this level, we're probably going to go down. We have not been there yet. And I think we're going to have a little bit more of corrective mode, really, here. Probably down like that. And then probably down like that to 58.71. S&P, what's going on here? So the S&P 500, I wanted to take wait here and see what's going to happen. I think let's let everybody else figure out what's going to happen here. The market is traded slightly lower, but you can see slid lower and then sort of bounce back upwards again. And I think it's just because people are fully aware of that this is a very bullish market, so they don't really want to short sell it. Now, if you look at this from a bigger picture perspective, it's a decent rally. If we have a few percent pullback, that would not be bad, and I think people are going to buy when that ever happens. So I would wait. I'm looking for some difficult corrections to the downside, and then alternatively looking to be bullish above 2,958.8. As for the stock markets, what do they want to do? They probably want to see, everything just being on point, everything sort of meeting expectations. They probably don't want to see, definitely don't want to see high wage growth, because very high wage growth is just going to force the Fed to raise interest rates, and that's going to cause the positioning, which is very bearish, U.S. interest rates to go all the other way around. So higher yields, and this could knock off a few percent here. So they probably want to see slightly lower wage growth than projected, but then a solid non-farm payrolls numbers. Again, if non-farm payrolls is like 300,000, which it could be because it's such a random number, then I think they're going to be scared as well. Because these companies, or for company earnings, they want more people employed, more people making money means they can buy more products, but they don't want them to be extremely strong, so it causes the Fed to sort of raise interest rates really sharply. And As for the German DAX, look at that. It's looking so good. And obviously, it goes. What happened lately is that the stock market bottomed out in line with all the other markets. But you might remember we had like sort of high. The market moved up higher, by the way. And then I think in February we saw some numbers from China and the U.S. improving, got people excited, and then we had some numbers from Europe that were not looking good. But then eventually we had GDP numbers, which were for the euro area, which was slightly better. Because you have these leading economic indicators, but they're surveys. They ask people, did you hire more people? Yes, no, unchanged. Did you produce more goods? Yes, no, unchanged. That's what becomes the PMIs. And the PMIs have not been that good. But the PMI at the end of the day is a survey. If you look at the actual data, the actual money flows, then the Eurozone GDP did slightly better than expected. So we're starting to see some slightly better moves here in data. And I think that sort of caused people to be more encouraged not to allow this market to pull back too much. Now, there's not always a great time to get involved. In fact, for the last few days, this market has not done nothing. And I still think you need that sort of strong pullback like this one here, maybe down to something like 12,238 before people are going to get really excited about buying here again. And if you're holding on to a long position here based on this head and shoulders pattern we talked about here, or maybe even on the basis of the head and shoulders pattern we talked here, congratulations to you guys. It looks like we're going to hit that target now. And again, their longer term target is at 13,088, which is level up here. And I think that's it, really. Let's see if you guys have any questions. Just let me open the YouTube. Here we go. Good. Some people here. So we have Sean McRae. Thanks so much, Sean, for your nice comments. Much appreciated. We have Anas as well, which says thank you very much for the insight. Thanks so much, Anas. And we have Nikos. What do I think about the New Zealand dollar after the dovish RBNZ? I have not actually following up on the RBNZ. When is that meeting? I mean, I know that they are bearish as well. I mean, there's priced in that they're going to cut rates, I think this year as well. Let me see here. I'm so bad with this now. So May 8th. Okay, so May 8th. So one day after the rate meeting from Australia, that's when they're going to have their meeting. And so usually, like if you look at inflation, it's turning lower. I think New Zealand. I'm not going to be able to give you like a perfect overview, but I always like to look at GDP, the unemployment rate, the inflation rate. Let me see here. Wage growth, if they have that. Core inflation rate. Retail sales. So this is GDP growth rate. It's not doing as well as it used to. 2.6, 2.3 at the last reading. Going in the wrong direction. The unemployment rate is relatively stable. From a historical point of view, still far away from the lows, but it's looking good. The inflation rate is really not going. I mean, it's around the 2%. The actual figures are 1.5, so going in the wrong direction as well. If I remember correctly, much like the RBA, these guys have a 2 to 3% band, and we're obviously not close to that band. This is the core inflation rate. Again, sort of moving away from 2%. This is retail sales, not as strong. So you have that, and then the next thing would be to actually check out and say, what did they say last time? Monetary policy statement. And this is the one for February. So this one, they even put the key changes there. Seems just to be the chart package, but I suggest you check out. Here we go. This is monetary statement, and monetary policy statement in pictures. That's amazing. Here we go. So this one you need to read, and you compare that with the figures on trading economics. You can also check what the big banks in the region are saying. And I know they've been saying for rate cuts. So what you need to assess is sort of what's being said here, what is the data telling you, and what are the locals, like a bank like Westpac, they're quite good. Try to figure out what they want to do. And then you try to weigh in and see, okay, so what's sort of the best solution, and what do you think is going to happen? As far as I remember, they will most likely cut. The question is this, though: will they cut this month or maybe later this year? If I remember correctly, it's later this year. I did a quarterly review of all major banks, but I didn't do it for the RBN set. So this is a little bit what I can tell you. And again, sort of economic growth is not going in the right direction. Unemployment rate is good, but it's a lagging indicator. Inflation is not really going in the right direction either. But if we just think ahead, most likely we'll go back to 2% because of crude oil prices. And then you have core inflation, which excludes usually food and energy, is also going down lower. And what is interesting here is that both of these are pretty much at the same. I think they have a target of 2 to 3%. And I think if New Zealand, if Australia cuts rates, which is more likely, it's probably going to cause the New Zealand dollar to gain versus the Australian dollar. And they usually don't want that. They usually think that the New Zealand dollar is way too strong. So maybe they will cut rates to combat a rise in maybe something like the Australian dollar versus the New Zealand dollar. Let's actually take a look at that one. So this is the daily chart. It's obviously trading sideways. And actually, by looking at this, the New Zealand dollar has actually been softening over the last few months. So maybe, at least from the market's perspective, they're more bearish on the New Zealand dollar, I would say, than the Aussie dollar. So that's as much as I can share with you right now, but I would need to go through all of this. Unfortunately, there's no substitute to doing research, and this is just maybe something I learned at university, and it's always good to try to research as much as possible yourself, because everybody, when they're looking at the markets, even myself, they have sort of their own set of perspective on things, right? And they all look at everything from a different light, and that means that sometimes you get a biased view. What I try to do with all macroeconomic analysis is that there's a basic model, and the basic model says that when interest rates are increased in one country versus another one, then that country tends to see a higher currency. Sometimes it's also not about that. Sometimes it's more about economic growth. Sometimes you see the unemployment rate improve in one country, and that suggests the economy is doing stronger. They might not actually raise interest rates, but just the fact that one economy is stronger than the other one also tends to drive currency flows. So I look at those things, and then you just try to rank them. And obviously, a country that is low ranked in 1 month might actually improve over the next few months. So that's something we need to pay attention to as well. But most of the time, you just rank them, and then you look at your charts and say, okay, what makes most sense? So, for example, I did a special update on the Aussie dollar, as you know, and you'll find that on the channel of ATFX. It's actually up here. This one here in front row. And what I talk about there is the fact that house prices are going lower in Australia. GDP growth is not as it used to be. Inflation slumped quite sharply. And most likely what's going to happen next week is that the RBA will, as a minimum, most likely lower their GDP forecasts, and that's going to be a prelude of a rate cut. At the same time, you have U.S., central banks in the U.S. telling you, well, they're not going to cut rates. So you have those two countries, right? So if you look at this at the chart, it looks like it makes a lot of sense what's going on, and then this would be that breakout. Alternatively, if you're really confident in your macroeconomics, which I'm not, on pullbacks, people sell. It's the same here, for example, in the euro. We all know that from a relative perspective, the ECB is going to be more dovish than the Fed. So, on these pullbacks, people sell. But it's a different sort of trading. It's more longer-term trading. Returns are, I don't know 100%, but I think they're not like that sort of strategies, because A, is much more long-term. It gives you more stable profits, I would guess, but it wouldn't necessarily give you huge profits. I hope that helped a little bit, even though I didn't answer your question. Hopefully I can show you, I showed you what you can look at. So you got a question from Antonio. What about cryptos? Sure, let's take a look at cryptos. So, wow, yeah, a good time to look at Bitcoin. So this is Bitcoin, and the market is trading now at a new 2019 high. So the market here is probably trying to reach 6,044. Take that level out, then we can probably go higher. And I think here the market went to target and it's sort of stable. And then if you look at this, it's not necessarily like a pattern. I can't see a pattern, but we are taking out the high. And that itself is a bit of a buy signal, and also marks the resumption of the uptrend. And the price, or the trend here is going to be bullish above 5,068. So the different ways of trading with this, one can buy the breakout, but the question is, well, you have resistance just above here. So if you buy now, what's your risk reward ratio going to be? By today, stop goes below here, then you look to make less than what you're looking to risk. It's only if it goes much higher. So here in Bitcoin, I would not necessarily get involved, but there's ample amount of cryptos available. So I would find a crypto where it makes more sense. Overall, what I can see right now, we are seeing some mixed results really. It's just Bitcoin really up today. Bitcoin Cash is at 1.36, which is not a lot. Then you have Dash, which is up by 1.93. So it's a bit mixed. Bitcoin is definitely leading. So for example, but we can sort of, I know for a fact that we are in a bit of a semi-bull trend in Bitcoin, or sorry, in cryptos in general. So it's a little bit like stock markets. So the stock market index, sluggish, going upwards, right? Now, what we can do here is that, say this is the S&P. So that's S&P has 500 shares, right? Now there's probably a few of these within that are actually, not having strong pullbacks. Maybe they're going like that, or maybe they've been trading sideways for a long time, and now looking to join the bull trend as we take out the high. So that is what I would look for. I would look for something like this in the crypto space, that looks to join the bull market, or that is already in a bull market and breaking out higher. that gives you a better residual ratio than what you're seeing here right now in in, in Bitcoin. Okay, I think we are going to wrap things up. I want to thank so much for watching. Don't forget that ATFX is offering some really good spreads, much cheaper than most brokers. And as well, if you do set up an Edge account with a minimum of 5,000 euros, so 5,000 pounds or $5,000, that's when you get those spreads. But you also get the opportunity to have some coaching, and I'm also working on this educational course, which is going to be released, I think, in 2 to 3 weeks from now. And that could be really good. I used to sell these courses before, and I still sell some courses, and they're priced at $3.99 per leg, but they used to be at $2.99 per leg, but they used to be at literally more than $1,000. So what I suggest, if you are looking around, you were looking for a better broker, check out ATFX. They're really solid on that. As well, look at this. We had 10 people watching, but only 3 likes. So something is wrong here. Guys, don't forget to click on that like button. If you like the presentation, make sure you like it. As well, if you haven't created your YouTube account, make sure you create a YouTube account so you can subscribe to me, you can follow, and you can ask questions here, like the guys here. Really, really important. If the more you share, the more I care. Okay, guys, thanks so much for watching. I hope you guys have a good weekend. Public holiday in the UK on Monday, so on Monday morning at this time, I will probably be doing something else than a webinar. Probably gonna be hanging out with my family. And might even be in bed or in pajamas having some breakfast in front of the TV, but definitely not a webinar. So not in on Monday, but I'm back on Tuesday. Have a good day, guys, and I wish you guys a lovely weekend. Thank you.